the cost and consequences of the domestic debt exchange program should not deter investors from exploring other options. Acknowledging the debt exchange program has resulted in a dip in investor confidence. Some experts who spoke to Joy Business at the Graphic Business Stanbic Bank breakfast meeting said there are still some viable options left.
That we are part of the cause of the problem that we find ourselves in.
We are part of the problem?
Yes, I'm not talking of the government, the problem the government has caused,
okay,
but the problem that we now face, which has led you to ask the question.
How is that?
Because, yes, there may be some reasons, but we place all our bets in one basket. We put all our eggs in one basket. I know you can say we did not have alternatives as investors. The safest investment was what we went for. We didn't have alternatives, but there were near alternatives that we could have put our money into. But as a general observation, we tend to be very, very risk averse in this country.
Well, we're made to believe that government bonds are safe to invest in. At least it's one of the safest places to put your monies.
So who do you blame now? If you believed that story and now you've been caught out, what do you do? But the main principle about investment is don't put all your eggs in one basket. Most people who are in the investment community, most investors, this is a basic principle that they know. Don't put all your eggs in one basket. Why did we do that? Yes, as I said much earlier, we can say the alternatives were not as attractive as the government bonds or putting your money in government securities. But that does not mean that you should put 100%. We could perhaps have put 70%, 30% elsewhere.
Elsewhere, where?
Well, we'll come to that. Because that's part...
Just to add to what he said, in fact, I agree with him, but probably to an extent, because just last year, towards the end of the year, I got some monies, and then I said to myself, do I put the money into the bonds, the T-bills, or probably change the money into foreign currency and keep them? And then a friend of mine told me that, Eric, change the money into either the USD and keep the money at home. At that time, the exchange rate was $1 to 14.5 Ghana cedis. Okay, so I changed just a few, okay, and then I put the rest of the money into the 91-day treasury bills. Okay, so, but then this morning I was talking to a friend. That money that I probably have at home now is no longer there. If a thief comes to me or breaks into my house and takes the money, I've lost everything. Okay, so I said to myself that yes, it would be better to place it in the T-bills, because at least you are sure, you are guaranteed that you're going to have your interest paid at the end of the 91 days. And even there, you have an option. Either you roll it or you only want the principal and all of that. So at least you have options. But we have come to where we are basically because of the fact that, like I've said earlier on, we haven't managed our debts well. Because if we had done so, I don't think that we would have gotten to where we are, where we now have to go to the IMF.
And the results that we have seen is that people have now lost faith in investment, especially in government bonds. People now have monies and they are thinking, what should I do with these monies? I'll come to your question about where else people can invest. But do you think that the problem is also how government managed this crisis, the communication that went before they started this debt exchange program, you know?
Uses for government. There's been, if you allow me to say, a complete failure of government. There's no doubt about that. What I'm interested in is the individual out there who is now sitting on money and doesn't know what to do with that money. Should he change it to foreign exchange and lose value as my brother here has just done? There are alternatives.
What would you advise?
What I would advise is, and this has to take some doing also, we need to work on this. There's a possibility of ensuring that the stock exchange really works and works very well. We can buy stocks. We can trade in shares. Yes, the stock exchange may not be performing as it should be. Yes, the private sector has a lot more work to do to inspire confidence in the investing public, to put monies into the real sector. That's part of the challenge we have in this country. We are not putting money into the real sector. I'm a business development strategist, so I'm the first to admit that we do have problems in the real sector. But these are problems that we can address. And by the way, anytime you have a challenge like this, the opportunities also jump at you. So now that we are faced with a huge challenge like this, I'm calling on my friends and colleagues in the business development industry to step up to the game. It is time for us to help the private sector, to help companies in the private sector, to put in place the right management systems, to put in place the right financing systems, and attract people like him. They don't have to put their monies under the pillow. They don't have to sit on their monies and say, what do we do with all this? You can invest in the real sector.
Now, Moody's Investor Service, the research arm of rating agency Moody's, says banks in emerging markets such as Ghana will slightly be impacted by the collapse of some global banks, particularly U.S. banks, Silicon Valley and Signature Bank. The two banks went down because of their risk and exposure to technology industry, leading to liquidity crash. Speaking on the rippling effects of U.S. banks' failures in a podcast, the global head of emerging markets at Moody's Investor Services, Scott Phillip, said regulators of the banking industry, such as the Bank of Ghana, must, however, prepare in case of any stress on the banking industry.
The impact of recent U.S. bank failures is very limited and reflects the very different dynamics in their asset and liability structures. So most EM banks are funded through diversified retail deposits with limited wholesale funding, and the banks have ample liquidity to mitigate the pressure that may come from depositor competition. So on top of that, we believe authorities in emerging markets will step in to provide liquidity and capital in the event of financial stress. Banks can also generally repo their large stocks of government securities to get liquidity. And in addition, and reflecting the generally less sophisticated infrastructure within many emerging market financial systems.
The Bank of Ghana has given firm assurance that protection of depositors' funds will be their major priority for the regulator. This was captured in a new document released by the regulator highlighting measures taken aimed at safeguarding the entire financial system. George Riafe.
Ghana, in a 13-page document, highlights some work done over the years, all aimed at protecting the banking sector in terms of laws, regulations and structures. This, it believes, are targeted at building a robust banking and financial sectors. The regulator also talks about some stringent criteria when it comes to licensing of commercial banks, measures and acquisition. The Bank of Ghana also talks about how it has tightened supervision to prevent any commercial bank from going down, as well as promoting corporate governance in the country. The regulator maintained that it will continue to effectively regulate and supervise these institutions, all aimed at ensuring the stability of the banking sector. Well, even though the Bank of Ghana may not want to directly link this document to current happenings in U.S., it is clear that the Bank of Ghana is moving to give some market assurance that Ghana's banking sector remains fairly strong and has what it takes to deal with any threats looking at the current happenings in the U.S. market as a result of the collapse of some two big banks. But for some, is this assurance from the Bank of Ghana enough in terms of giving market confidence, as some players are still worried about the aftershocks of the domestic debt exchange program on the entire banking sector, despite the Bank of Ghana's assurance that it has put in place the required structures to let the industry absorb the expected shocks.
We stay a bit longer on the banking sector as former president of the Ghana Association of Banks, Alhassan Andani, says the Bank of Ghana must maintain its policy rate to encourage growth. The Monetary Policy Committee is meeting this week to review the economy and take a decision on the policy rate, the rates at which it lends to banks. Mr. Andani believes maintaining the rate will ensure parity within the financial space. He's been speaking to Joy Business.
Bank of Ghana has, their inflation targeting is a policy, and therefore they have to reflect what true inflation is. But there are other factors, the demand and use for money. They have to target whatever their inflation is. And if, for example, the high interest rate, which was driven by the high T-bills, was the one driving other factor prices, then of course, they should stick there. Let the T-bill rate drag down the other, and then we'll achieve some kind of parity. But right now there's a big gap between, of course, the T-bill rate of inflation and the Bank of Ghana policy rate. But all of that is in the correction mode. It should over a short period of time, 6 months to a year, you should see some convergence of these rates. Hopefully more downward and more, inducing growth in the economy. Yeah.
Now, let me take you to the calls from fund managers. They are saying having over 90% of the funds being invested into government securities and all that, they feel there's the need for some sort of reallocation of funds. We should reinvest it into the private sector to prevent crowding out effect and all that. What do you make of it?
That's the first thing to do. Fund managers, of course, it's just because if we look at the rate of return on various financial assets, it's only reasonable that you think that lending to a private sector should give you a higher financial return. But the risk there is very high. So because risk was high, everybody was crowding into government paper. Now we've suddenly found out that government paper is not as safe as we all thought it was. So now it's proper for us to go and do the first thing, go back to first principles. So your first principle for allocating investable funds was always to your best well-assessed risk asset, which is in the private sector. And then, of course, use government as anchor in terms of just ensuring that you have near cash, you have some liquidity. But, that's supposed to be what investment profile should look like. But because government rates were very high and we all perceived it to be riskless, all the fund managers pushed their monies into those government instruments, and that's what resulted in what you call the crowding out. So the field is leveling out, and the private sector should now begin to see more funds flowing through and more risk assessments, being undertaken to ensure that we have safe and a balanced portfolio.
So we've seen interest rates being on a falling spree for some time now, over subscription and all that. What does this mean to the financial space?
Well, it just means improvements, not just in the government's own debt borrowing burden, but also it will scale back the aggregate lending rate. The T-bill rate is part of the formula that determines lending rates of banks, or what we call the Ghana reference rate. Now, for me, the T-bill rate coming down is just a natural thing to do, because Ghana government could not, offer itself to be paying 35% on its own currency, and therefore it's only appropriate that we determine a rate that is much more sustainable. But I think the downward trend is very welcome. It will drag down the Ghana reference rate and improve the lending rates to enterprises. Otherwise, with a T-bill of 35% and inflation at wherever, and the monetary policy rate, I just could not see how the private sector could borrow and make money out of borrowed funds.
Now, the Public Utilities Regulatory Authority has assured that it will assess complaints raised by the Ghana Hotels Association on wrongful charges and high water tariffs. The assurance comes after the PURC wrote to the association promising to look into the mechanisms that may have led to the high water tariffs recorded by members of the association. And we take a look at the statement or the response from the PURC, which reads, the Commission wishes to note that in announcing and gazetting the water tariffs, it was clearly indicated that there was restructuring of GWCL's consumer categories to enable the company meet consumer demand, serve them well, and balance the interests of both the company and the consumer. This restructuring is ongoing, and your letter will be valuable in improving the process. Notwithstanding the above, though, the Commission wishes to state that the concerns raised by your association will be assessed and take the necessary action to mitigate the impact of the Commission's quarterly tariff adjustment mechanisms. We count on your usual cooperation. Meanwhile, the Ghana Hotels Association say they will picket the Public Utilities Regulatory Authority if utility tariffs are not reviewed.
See, the PRC's response to our letter is very evasive. And for me, it begs the question, who regulates the regulator? Because if an institution like the PURC announces an 8.3% upward adjustment in water tariffs, publishes it, and goes around to do the exact very opposite of that, and I mean the extreme opposite of that, up to 167% increase. And nobody is talking about it. We haven't heard anything from the sector ministers, tourism, arts and culture, or water and sanitation. In fact, in our letter to the PURC, we copied the Parliamentary Select Committee on Trade, Industry and Tourism. We haven't heard anything from them. We also copied the Ghana Tourism Authority. We haven't heard anything from them. So, who regulates the regulator? Because if the regulator, after all the engagement with the stakeholders and deciding on a particular percentage, can go around it, it means the regulator cannot be trusted. And again, we also requested that they should restrain their workers or staff from harassing hoteliers in paying the new tariff. But guess what? They are out there doing exactly that. Because we expected that since we have petitioned you on a matter, at least we could calculate that 8.3% increase that you gave and pay that one for now as you resolve the issue. But if you go around demanding that 167% increase that you announced, that is highly insensitive. And I think the PRC must be called to order.
We'll continue to follow this development and bring you more subsequently. But away from that, as part of the World Oral Health Day celebration, Unilever Ghana PLC, producer of Pepsodent, has launched a campaign to encourage people to take the step to improve their oral health. According to the category manager of Oral Care Ghana, they are committed to making access to a dentist seamless and affordable, hence the introduction of the teledentistry service. Here's more.
Held the World Oral Health Day celebration under the theme, "Now everyone can talk to a dentist." Pepsodent Teledentistry Service gives patients the opportunity to seek professional advice on issues related to teeth, gums, and bad breath. Speaking on the sidelines, category manager of Oral Care Ghana, Osato Ibuomwam, said the teledentistry service was necessary to give patients easy and affordable access to oral health care.
We have started our teledentistry service. We know that access to dentists is one of the key barriers that prevents people from going to actually visit a dentist. So we have decided to do what we're calling bringing the dentist closer to the consumer. And how we have chosen to do this is to make it possible for consumers to access dental consultation via their mobile devices. So you can have a conversation with a dentist, either digitally or virtually, and you can get information on how to take care of oral health problems that you can deal with at home. Now, if you're not able to do at-home care, then the dentist recommend that you visit a dental clinic. But we believe that this helps with education, and it also makes it easy for people to come away from that fear of actually talking to a dentist. So when we think about some of the digital apps that we use these days, and the fact that you can subscribe to a lot of programs on your phone, the way teledentistry has been set up is such that you can either scan a QR code or call a toll-free line to reach a dentist. Now, what happens is when you do get to a dentist, the dentist will require a bit of information about yourself, and then you'll then be able to ask your questions or say what your complaint is. The dentist then provides advice for what to do, and if those are things that you can do at home by yourself, the dentist tells that to you. If there are things that you have to go into the dental clinic for, then the dentist will recommend clinics near you so that you can take yourself to go to the clinic to have them resolved.
President of the Ghana Dental Association, Dr. Paapa Pupulampo, said a teledentistry service will improve access to oral health care to avoid costly procedures in the future.
We realized that this campaign of seeing the dentist and talking to a dentist is meant to inspire an attitudinal change that will help you to take part a responsibility of keeping your oral health. And it's also meant to motivate that action of the habit of brushing day and night, and it goes further to sustain that good habit for you to have a good health. With Pepsodent on the block, we introduced a teledentistry, a good move to augment the efforts to be able to keep your oral health succinct and on point.
The initiative is geared towards encouraging the public to maintain a good oral hygiene.
On that note, we end Business Live here. For more business news, you can log on to myjoyonline.com/business. I am Beverly Broohm. Enjoy the rest of our programs.